The market on the Treasury bills end today was bullish. The reason why it's bullish is because despite system illiquidity, like liquidity fizzled out to below 100 billion levels, what has happened is that people are watching the OMO maturities of Thursday. There's no OMO maturity, but the amount of bills that will be maturing in total is now up to 40 billion. This simply means that fine, there's no money coming in, but this week we may not have OMO issuance by the central bank since there's no system liquidity to mop up. So this has driven, bullish sentiment in the secondary market. Rates have dropped to as low as 12%. Let's say if I look at the entire yield curve, on the 1 year I can see trades are done at 12.45, 12.50, which was where the primary auction stopped at today, 12.50. We're coming from 12.77 levels and 13. In the last 60 days and last 30 days, we were at 14, 15, and we've simply moved down to 12.5 levels. It just shows the amount of appetite you have in the debt markets compared to the equity markets that you just spoke about.
Right. Okay,
What's happening with inflation really is that the uptick is being caused by food.
Yes.
We do not see a slowdown soon. It looks like it's just beginning. Food, because of the insecurity in the north, majorly, and the mid-belt part of the country is going to lead into probably some form of shortages, not just because of growth difficulties, but also distribution. Security network is, there are challenges with security, and they're looking at the flood. The rains that have started, there will be flooding in some places like we've seen in the last 2 years. This is going to affect infrastructure and how to deliver this food. Most of it are perishable, like we know. So we expect food to continue to be a challenge. Core inflation didn't move majorly, but inclusion of the minimum wage that is to be paid, which is not, fine, there's a legislative act on that, but it's not been paid. Once that is paid, there's more money in the system. There's shortage of food, which is a core commodity determining CPI. And then we're already discussing fuel subsidy removal and the sustainability of what the NNPC is doing. So all these points to possible further hike in CPI.
Right. So let me get your thoughts on the outlook then. Given the outlook that you've pointed out clearly in terms of your expectations for things such as the minimum wage and, of course, the potential rise in petrol prices, how do you see the markets pricing fixed income instruments moving forward? Okay.
We're having a positive curve with bonds remaining at 14 levels and 14.5, that range. For Treasury bills, we are down to 12, between 11 and 12.5, like I've said. So it's a positive curve. Most investors are playing within the 180 days to 1 year tenor, simply because you don't want to get caught on the long end when the spike happens. Imagine inflation getting to as high as 13, and then you have locked in for 3 years, 10-year bond at such levels. Your real rate of return may be affected. So we're seeing a lot of caution with inflation play versus yield on debt instruments. Right.
All right. I have to ask you about your expectations for the MPC. Now that it's clear that the governor of the central bank, Godwin Emefiele, has gotten the president's nod for a second term, that perhaps speaks to continuity in terms of the MPC's current stance. What do you see happening next week?
Okay, two major issues to look at from the FX side and the way they've used money markets and monetary policy to manage, the demand for FX and FX stability. It seems they will try to continue what they're doing on the FX regime. On the interest rate side, there was a reduction of 50 basis points on the last MPC, and there's call from most stakeholders that MPR should be dropped simply because we need lower rates to stimulate this economy and then to ensure that loan creation becomes a priority for this central bank. I want to believe they'll start looking towards that direction, and we could see, it's a possibility, that we could see a 50 basis point reduction in MPR once more, simply to adjust to market levels.
Sorry, Bankole, I have to ask you this. You don't think that the spike in the inflation rate that we just saw could have any bearing on that stance? You still see a 50 basis cut at this meeting?
Honestly, my first choice or suggestion would be that they would maintain, but I'm just saying that's a possibility we should assume that the market is dynamic and the central bank in itself is going to watch the market. Rates are on the low. What happened last time was that the drop from 14 to 13.5 was in reaction to where markets had dropped to in the market. So there could be some moderation simply to, pan to the calls and demand of the Lagos Chamber of Commerce and other major stakeholders who call for reduction in interest rates and, creation of credit in order to stimulate the economy. This doesn't mean this doesn't mean that we're taking rates down to 11 or subpar. Should anything happen to inflation as we go on and believe it's a flexible MPC and a dynamic one, watching the markets carefully.
All right.